Thank you.
Thanks, bro.
Principal at Arrington Capital. We're a Web3 hedge fund. We do both liquid and private investments all across crypto. I focus mainly on the venture side, backing companies from pre-seed all the way to TG.
Sweet. And a little bit about myself. My name is Tommy. I was a co-president of Blockchain Berkeley, Go Bears, and also currently I'm also an analyst in investment on the venture team at Lite. And so without further ado, I'd love to jump straight into it. So really quickly, I guess more broadly before we kind of dig in, I think it's pretty interesting because on the board right now we have something of diverse culture. We have one direct points, one of more DeFi, one on the venture and liquid management side. It's kind of curious to see all those opinions on it in general. And so the first question, just more broadly, is kind of what you guys' thoughts are on just in general, like meme coins, the big cycle we've had, how it kind of impacts crypto, and in general, just the overall temperature. So I'll just start.
Yeah, this is kind of a broad, pretty philosophical question. So, if I zoom all the way out, I think crypto is a product market fit in today, at least, three things. The first is Bitcoin as digital gold. The second is stable coins as like a pretty useful form of currency for, especially people in places where their government and financial system isn't trustworthy. And then the third one is as the internet's casino. And meme coins and meme coin trading are sort of like the new age casino for the digitally native world. And so insofar as like you think about it that way, if you look at human history, people have always gambled. Like it is a sort of fundamental thing to human behavior. I don't know, I can't tell you exactly why, something about like wanting a little bit of risk, uncertainty, excitement in life. Always being on the edge of loss or ruin, I don't know. And so that behavior will always exist, insofar as like you expect the internet to just already dominate our existences and increasingly do so. I don't think the internet's casino is going anywhere. Even though meme coin volumes and stuff have dropped precipitously in the last couple months. I have less of a view on what form that internet casino takes, whether it's pumped up fun and using these bonding purple launchers for tokens or if it's something else. I don't know, right? Last cycle it was NFTs. This cycle it's pumped up fun and point launching, maybe it's something else in the future. But the behavior will stay. So I'm confident in that. I have less of a view on the form.
Yeah, taking a little bit of a different angle, I often think about the asset launches of the cycle to the condition of the industry that we're in. So when I say that 2020 was DeFi cycle, 2021 we had low liquidity, a fixed number of assets, so something like NFTs, easier to control the price discovery is a little bit later. And as ecosystem tooling, as well as on-ramps and DEX on-chain liquidity kind of improves, we have something like Pump One built on top of Radium, which already had a very vibrant AMM and Sniper bot ecosystem since 2021 to 2023. And without the Sniper bots, the long tail assets like meme coins actually would not get initial liquidities, transferring from the bots to the initial devs and giving rise to this asset class in general. And obviously, like before that, we had the likes of Bonk, Doge, Pepe kind of setting the stage for a new asset class. But as these long tail assets actually get initial liquidity injection, you actually get that positive feedback loop to have more and more of those. And then I think about what we call the cost of producing the asset as opposed to the ceiling of the price of the asset. And the higher the ceiling, the lower the cost, the bigger the arbitrage opportunity. And your ceiling is a combined ceiling of all of the assets within this asset class. So initially when memes first came out, the cost of producing them were relatively low. The ecosystems were building them with a good foundation, long teams, great, running 12 different projects, cash flow positive in each one of them, and running this kind of like a company, right? But the meme acts as the culture kind of symbol. So the ceiling is really high and the cost is relatively low. As compared to gaming, for example, which we deal with a lot, games require 2-3 million at least upfront to produce even like a low core, mid core game. And you have the team basically pricing their product at least 5 times the cost that they're producing it at. So like the initial launch is going to be above $10 million because your cost to launch ratio is like 5x at least. But for meme coins, you can launch at 500,000 or a little lower, right? So that creates just way larger of a wealth effect. And overall, I think that's just the current stage of where we're in. But because the number of assets for meme coins increased significantly, the ceiling per token is decreasing, and the cost is increasing because everyone is trying to market make for the on-chain liquidity. Now, I look forward to what comes after, but that's kind of my take on the current stage.
I think we're in a transitional state for meme coins, and I think in order to understand where we're currently at, you have to understand how we got here. I think there were two main factors that drove meme coins to be so successful in the most recent cycle, and the first of those was regulation. Meme coins were the only kind of crypto token that you could launch. You could do it anonymously, you could do it with low cost, and you weren't going to get sued by the SEC for it. If you launched a quote-unquote real project with actual utility, and you achieved any level of success, you were guaranteed a Wells notice, and the Biden admin was going to try and send you to jail. And so the only way that you could actually launch a token was by launching a meme coin. And then as an investor, if you're trying to choose what asset do I want to invest in, well, do I want to invest in the guys who are public, doxxed, and probably going to go to jail if Gensler gets a hold of them? Or do I want to invest in the anons that have a funny picture and are probably safe? And so I think that people decided that the risk reward of getting rugged by the government versus getting rugged by the devs wasn't quite balanced, and you'd rather take the risk of getting rugged by the devs. And so I think that drove a ton of capital into meme coins because you didn't have new launches that were happening as frequently from quote-unquote VC coins, and there was the risk reward of crackdown on any legitimate projects with utility. Now, the second factor was, I think, also driven by regulation, and it's that with the meme coin, you can actually get in on the ground floor. You can get in at a reasonable valuation, it's much more equitable to the community, and you don't have all of these private rounds pumping up the valuations billions of dollars before the token even launches. And I think that retail was actually pretty smart, as they realized that buying into the next multi-billion-dollar VC dump on Binance wasn't going to go as well for them as if they just bought a meme coin and took a chance on it because it was already so close to zero. How much lower could it go? And previously, when we used to do ICOs, and this was something that was legal and not really being enforced by the SEC, you could actually buy into something like Ethereum or Solana at a very low valuation and make life-changing money. And I think this has contributed to the success of a lot of memes because you didn't have many crypto projects where you had real retail, real community around the projects that had a life-changing event associated with buying in. Whereas with meme coins, it was happening all the time. And so I think because of those two factors, the launch valuations and also the regulatory pressure, meme coins were especially well suited to capture all of the incoming capital, mainly from retail.
I actually really like all of those takes. I think one thing that's pretty interesting is that meme coins are actually pretty symbolic in the space. Although viewed as gambling or more in the negative sentiment, I think they actually represent a lot more of what the industry is looking towards and how it kind of reacts. On your point, Bolton, I think a lot of us saw that meme coin surge in activity, volume, and interest, especially after a lot of the low-flow, high-activity kind of VC plays that people play. And we kind of see this turn out as well with all the different meme types of raises that people are taking on, whether that's megabeats, NFT raise, or echo deals. It's pretty interesting because I think meme coins do reflect a lot of what the market is kind of saying. And so actually back to the point that you mentioned, I'm actually very curious because I think that one of the most organic PMLs we have seen is gambling in the space. And you mentioned a couple of NFTs, DeFi, altcoins, and now meme coins. So I'm curious if this is sort of a powerhouse of crypto adoption, and I guess one of the major use cases. How do you think it impacts in terms of I guess sentiment, the overall viewpoint towards crypto? Because I think that meme coins, while have battle tested a lot of blockchains, a lot of including, and also has brought a lot of attention, it also has led a lot of room for I guess malicious activity. And so I'm curious to hear your thoughts on that balance.
Yeah, this is something I think about a fair bit. there are two stories I could tell, and then, this sort of exercise for the audience to decide which story they believe in more. I'll give you sort of my take on this. But the first story is that, yeah, we sort of collectively as a crypto industry are building the internet's financial layer, like a truly permissionless system that's going to be handling, first hundreds of millions, now billions, tens of billions, and trillions in the future. And that this is sort of like step 2 in that journey, where step 1 is maybe like Bitcoin and early Ethereum stuff, and step 2 is like Solana, like something that's actually internet scale and regular people can use and interact with. And then the first thing that those regular people interact with is sort of meme coins and Photon or Moonshot, or pick your front end for doing shitcoining. And that this is sort of like, early step into the sort of longer future for actually trading real assets, where real is defined as like connected to some other financial activity that's not sort of self-referential. That's one story. The other story is that we build this permissionless system, and then the first thing people do in a permissionless system is just try to scam each other as fast as possible, as creatively as possible. And this actually has been negative for the industry because it's sucked in a ton of the mind share. Like smart people who would otherwise be doing real things are just like, nah, I'd rather just try to punt meme coins and like make money quickly, or launch meme coins and rug others. And that this has sort of collectively been a large drain of attention and capital. And that then this like actually doesn't go anywhere and just let us down a lot. So those are the two stories. It's hard for me to know which is true. I tend to be a little bit on the side of the first, because you always see with permissionless things, like the first thing people do is like the degenerate stuff, and then things mature over time. So that's my optimistic belief. I mean, that's also because like I spend a ton of time working with people building stuff in the Solana ecosystem, and the thing that I think is underappreciated is like all the real things that are happening. People who are building sort of stablecoin payment products, people like Chris working on it, bringing games on chain, a lot of deep in project like Helium that are actually providing internet access to people in the US and increasingly in other places, right? So I think there's a lot of reasons to believe the first story, but you can't entirely discount the second. It's sort of how I see it.
Yeah, definitely. I think it's hard to see people kind of, group these 2 points, because it's usually very easy for retail and just regular people to kind of lean towards the second, especially with all the things we've seen, Trump, Libra, South Africa. It's kind of tough. And I remember in the summer when I was trading a lot, there was the whole period where like the whole Twitter timeline was just purely porn, because all the porn stars were kind of going on and launching meme coins. I think it was a pretty tough time to see like the distance between like meme coins industry, like real actual innovation, and I guess like use cases. But to that point, I agree. I guess on the other side of it, as a fellow venture partner, I guess like us here at Hilton, how does it kind of impact venture and in general just investments, since meme coins kind of have to change the space a bit towards what people are looking towards, how people kind of use VCs and whatnot?
Yeah, well, just piggybacking on the prior point, when the internet first came out, it was mostly used for porn as well. And it still is one of the largest use cases. So, I mean, you can be optimistic or pessimistic about that this probably isn't going away. People are always going to have an instinct to gamble. And I do think it has been destructive for retail because they've lost a lot of money on it. And my biggest issue with a lot of these meme coins is that there are very few that I don't believe are zero sum. And those are, I think there are maybe 2 meme coins that are not zero sum. The rest are, it's going to be bloody PvP, and I don't necessarily think that's great. As a VC investor, we're investing in things that we think are going to last long term. So we like to invest in things that are going to generate revenue at some point, that are going to be useful. And right now, a lot of the infrastructure that VCs invest in does make it easier to create and trade meme coins. And while we decided not to do pump.fun because that was just directly addressing the meme coin craze, like we have liquid positions in like large L1s, and we've invested in a lot of the DEXs that make this possible. And our hope is that eventually all of this infrastructure is going to be used for more than just meme coins. It's going to be used for like real life securities being brought on chain, or protocols that actually generate revenue and have yield and are not zero sum. So I think that's our hope as to where this goes. I think that we sort of swung too far in the direction of just meme coins everywhere, and that's all people are doing and talking about. And I hope that retail sort of shifts back now that we don't have the same regulatory issues, constraining them to just meme coins, and they choose to participate in echo sales of projects that might actually generate revenue one day. And there are a couple of meme coins that could do well, and some of them look interesting, but we don't need as many as we have right now. And my second point would be, the reason why this is such, sorry to cut you off there, the reason why this is such an issue is I think meme coins are largely, and speculation in crypto writ large, is largely driven by a lack of social mobility. And like, if you think of the Adam Sandler meme, like let's bet on this, that I'm sure everybody here has seen on Twitter. Like there's a lot of people, especially outside of the US, who their only way to actually escape the rat race is through gambling, because they live in hierarchical societies with oppressive regimes. There are very few opportunities to actually get ahead and achieve real financial independence. And so I think the more and more that this happens, and this is driven by a whole host of things, like demographically, there are a lot of countries that have huge problems, and from government public policy stances, like there's a variety of reasons why this is happening, but there is a reduced amount of social mobility, and so people see their only exit, especially young men, their only exit is to gamble on crypto. And so I think it'll stay around as long as that's an issue, and I don't see that going away.
I just wanted to know, what are the two meme coins?
I would say Bitcoin and DogeCon.
We're not
But I don't know if Bonk has achieved a state velocity yet.
You mean Bitcoin or Bitcoin?
No, like actual Bitcoin.
What's a meme coin? You said meme coins.
Yeah, well, I think Bitcoin is the OG meme coin, right?
Everything's meme coin in this space, right? Everything's meme coin. Cool. As a venture fund, actually, like just bouncing back, if you are trying to invest in cash flow businesses and like the general narrative of maybe last year are meme coins, it's kind of tough to see. I guess in the latter half of AAA just came around, but is that kind of the period where venture kind of sits back and you're like, okay, this is all just gambling, it's against your thesis of investing in that. Do you guys kind of sit back as a venture fund?
If the thesis is solely around gambling meme coins, I don't think that it will last like 10 years at the rate that it currently is. I could be wrong, but I don't think that revenue that you're seeing right now with Pump.Fun is necessarily going to exist 5 or 10 years from now. So I mean, you can look at that to see how it turns out. I think that a lot of the dexes, like there could be dexes on Solana, that their revenue will probably be higher 5 to 10 years from now. So it depends on whether it's expensive with other things.
And I have just one thing. This is a little bit of a tangent, but maybe an interesting one, which is that Pump.Fun or Radium like get a lot of attention because they've made a lot of money and have been like sort of the focal point of a lot of meme coining. One thing that's been crushing it in crypto as a use case and also makes a ton of money is stablecoins. Like the best business in crypto maybe was Pump.Fun for a while, but it's actually Tether. I think like it's worth like calibrating because I think stablecoins as a use case are something that is one of the rare things in crypto in which maybe the actual usage outstrips the attention. And so just something to keep in mind.
Definitely. Cool. I didn't mean to sideline you, Chris, but back to you on just general Sonic and meme coins. What have you kind of seen in that space, especially since I feel like when thinking about Sonic and I guess in my own experience, I feel like I've been seeing a lot of DeFi, a lot of stable coins, over-collateralized, algorithmic, non-algo. You guys have pretty robust and interesting transitions like from Phantom, and so I'm curious like, how it's been in the coin space there.
Just to clarify, we're building the Solana SVM, so it's a different Sonic function. But just to mention a little bit on our strategy, initially, a lot of what we look at is unrelated to meme coin, just period. Reason is we believe that meme coins are more so longer tail assets that require the ecosystem that I just talked about, whether it be the AMM or the sniper bot systems to inject liquidity into longer tail assets. So now when you think about that, you actually need those pieces initially, whether it be porting a Orca, getting them to support support the full SVN ecosystem, or talking to new teams to kind of launch their own version of the LLM on top of the chain. There are other things you have to set up. So we are still in the early stages of doing that. And now like a lot of what we think about is actually bringing attention into the ecosystem. So I think meme coin is an example of existing attention on crypto Twitter, for example, focusing on this asset class. So we think a lot about what other asset classes can we actually create, what narratives can we create that resonate with TikTok, resonate with Instagram users, resonate with WhatsApp users, and for example, maybe get them to trade through a link on top of Instagram and trade existing Solana tokens that have liquidity on top of Sonic and on Solana as well. So all those experiments are going on simultaneously, but launching multiple assets is really not our focus at this current moment in time. And I think in the early days of Solana, that was also very real. So early days, you had Radiant Launchpad, you had Serum, and you have a lot of these kind of king-made projects, which Foundation gave a lot of support to. And we are doing that with a new group of projects coming in and building entertainment products on top of Solana.
Gotcha. And sorry for the confusion, but happens a lot. Yeah, actually, it's a very interesting point because I feel like when looking at new ecosystems, you mentioned that like these ones are kind of long tail, but it almost seems like maybe more recently, with regards to like bearish and story, ecosystems are kind of using these long tail new ones as a good market. And so like it's pretty interesting to see because I feel like I've been hearing and looking around those ecosystems and seeing that they're kind of like batching together or making teams to kind of launch with their TG, also like new ones associated. So I'm curious, do you think that's kind of like not ideal, not kind of the route we should probably go to other countries?
Yeah, great question. I think Hello, for example, on top of Vera with primitive support to as a like a VC-backed meme coin is really at the core not traditional early sale when we talk about meme coins. If you look at the chip structure in terms of the whole cap table and then also their tokenomics that's released, I would argue it's less of a fair launch, but we've migrated to a point where we are sniping the early supplies for every single meme coin team to own 95% of the book. And now when you look at that, even if they have very, very high FDB, they own 95% of the total supply, it's only 5% of circulating supply on the market. So for Hello, I would argue it's a healthier way to have a more controlled launch for something that is capturing attention. But I think the meme coin is really a branding or go-to-market, and we'll see how it goes.
Right. But actually, that's really interesting because I feel like that goes full circle back to supply control and what's in circulation and what's not. So I'm curious to hear like your thoughts specifically, especially like this cycle, because we kind of got from like keep a little bit in the ecosystem and public control to kind of like make it a bit more fair. But then we kind of see the opposite, where it's like let's make it free for access to all, and you're kind of saying like. It's like Hello is kind of saying. I know that some ones as well about age as well. So like, do you think that there's an end to this cycle, or do you think it's going to go like waver back and forth?
Yeah, I think every single project founder's first reaction from my perspective is that what are the resources on hand from like the project's perspective to be able to actually launch the server, right? And then if we are close with centralized exchanges, if there are cap tables, then you think about centralized exchanges first. If you're deep within the DEX ecosystem, you think about launchpads, DEX liquidity first. And depending on the resources that you have, your decisions become very, very different. Just as a very simple example, my shell on BNB, backed by Dragonfly, Binance Labs, and such and so forth, launched at 20 million FDB on top of the DEX. It's probably the newest meta that you see. Once it gets back to 20 million, really like the team can buy back, the Binance can buy back, retail can buy back at a lower amount. And it only takes $4 million at a 20% circulating supply to buy back all of the tokens. Now, I would argue that's a healthier launch because everybody who buys at that level, even the retail, can also benefit from that launch. But that's the newest meta. Now, if you are a Solana founder, really, really deep in the trenches and have your own kind of DEX relationships, you have a lot of liquidity to tap into. You can work with Drift Camino, set up concentrated liquidity, wide liquidity across the board to have the entire ecosystem rally behind it. So when we did the launch, we actually had a balanced approach where it was not so much of the low flow, high FDB meta anymore, and the exchanges don't like that. But the circulating supply is also not as high as it is now, around 25%. So around 10 to 15% 20%, you can set some aside for Texas, set some aside for centralized exchanges, and then think about how much you can drop to the users. So I think the oscillation between the flow, the FTB, now the floats are higher, but that also makes the market cap higher, and the FTB can go a little bit lower. But for the founders, there are a lot of trade-offs to think about there.
Okay, that's pretty interesting to hear. I actually didn't know about this. That's awesome. Cool. Okay, so I guess zooming back out and looking at like the bar ecosystem and where we're kind of at in this space, I feel like transition towards maybe more liquid markets of NFTs towards liquid markets of meme coins have kind of had their intersection in the past couple months as well. We've seen things like pledging payments and Pangu, Malavia, and Dogecoin, and Apecoin of theirs as well in the past. So I was just curious to hear all of your thoughts in general on just where you guys think that intersection lies. I know like once Solana, I think there was a bit of an NFT craze as well, but I'm curious to hear as well if you think that if these will continue to coexist in you guys, or maybe it's more like a
Yeah, this is, my prediction is that NFTs will come back. And it may not be exactly in the form of these like 10,000 PFP drops, but if I think about what is the behavior or like motivation that's represented in NFT buying that's slightly distinct from meme coin buying, like both of them have like a heavy speculative gambling excitement element. Meme coins though are like, much more accessible. So in some ways like the feature for meme coins was that your unit bias was that they were, fraction of a cent. And so you like felt rich going up like a million of these tokens. And so that's good. And that like made them accessible and helped them pop up. That could become in some ways the lack of accessibility could become the bug for NFTs, or rather the feature for NFTs, because it's a slightly different kind of status game. It's like the exclusive status game. It's like only I, and this is why I think, some NFT collections like Pledging Penguins have managed to retain sort of meaningful value. I don't know what Pledging right now, but they were literally worth more, like a nice car is worth of $1, so they more than retain value. But my point is, like exclusivity and status signaling is a thing that humans do and want, and so that's worth something. At some point, like the collective consciousness could shift to that. I would not be surprised at all.
Yeah, chiming to that a little bit, been holding a couple of these collections for over 3 years now, and being in the community for over 3 years. Interesting, right? Like the washout of the tourists into the deep there, coming back up a little bit, and we're still down huge. But now like that status originally was really like a flex or like a social status that I'm flaunting to the outside world by holding or a Doodles in the early days. I bought it at 13, now it's at 4. But after this whole cycle, we realized like the core holders who are building within this industry, the status shifts a little bit to external flaunting into like kind of internal building status of like, these are the people that I've built with for the last 3 years. And like when, for example, if Matlabs, launches a token with Backpack, these are going to be the biggest supporters over the last 3 years, really rushing into being really vocal about the project. So I think the mentality definitely has shifted because we've been down for so long.
So my take on these like Apecoin, Pengu, NFT associated meme coins, like all zeros. Like this is just a massive rug, and anybody who's buying at these high prices, I wish you the best. I think that NFTs themselves, they have value, and the reason why you didn't see NFTs pop off this cycle is because you never actually saw a real bull market for altcoins. And NFTs are farther out on the risk curve than alts, and so if you don't ever have meaningful like alts pumping, you don't have the conditions for an NFT run. And so I think if you're like looking for when are we going to top this cycle, I don't think we've topped yet. I think that we're actually going to go into a period where like money supply continues to increase, we'll get more global liquidity. It seems like in the US we might have some pain, we might force the Fed's hands there. We're going to have more liquidity, and that always pumps risk assets, and it's just going to move down the curve, and eventually we'll see NFTs pop up as well. I 100% agree with the status thing. And the way that I explained this to a friend in college is he was questioning like, why are you into these NFTs? Like, why do you believe that they're valuable? I'm like, well, if you're willing to pay like $40,000 for an AP or this, you can only show that to people that you see in person unless you're like pretty brazen about it and post it all over your Instagram. In which case it's like a pretty low status move. But if you can have an NFT and you can make that your PFP on Twitter, then like all 10,000 people that follow you can know that like you hold pudgy penguins, or that you at one point when it was hot held a moonbird or an ape. And so I think that the reach that gives you means that like per dollar you spend, the signaling output that you get is way higher. So in theory, an NFT should be much more valuable than that Nautilus, because you're able to signal it to your entire social network in a way that isn't quite as cringy. And so I actually do believe like these blue chip collections will do well later in the cycle. I am quite bullish on them. It seems like Pudgy, I'm honestly really sad for them that they launched the token, because I think the token's a scam, and I think that like hurts the brand if the token goes down. And so it's kind of a liability now. Like, I'm glad that people make money, but I think you really have to do a lot to protect your brand and make sure it doesn't feel like a cash grab. It needs to feel like a community. And you don't want to be talking about community just because the price is down. You want to be talking about it because people actually love the project, and they feel an affinity for somebody else who holds the same collection that they do. So that's my take on NFTs. I actually am like bullish on a lot of the blue chip collections, like meme coins. Most are zeros, but the top ones I actually think will do well.
Nice. You must not have been a budget holder. No, basically. Cool. Okay, so one last, I guess, broader question before we get into the last question. Future. I guess a lot of us here are kind of wondering, where we can kind of take us and what we kind of want and wish in this space that would be most beneficial towards each of our own respective individual, I guess, like goals. Like mine personally, right? Like I did trade a lot of Bitcoin, so obviously I do hope for the best in that space. But I do know that it is value extractive and it is definitely authentic. But I'm curious to hear, you guys all come from different ecosystems and backgrounds, so I'd love to go down and go this one more time, just hear your thoughts on what you guys hope this next week will happens.
Yeah, I can start. I was talking to Nigel Eccles, who's one of the founders of FanDuel, about casino businesses, and he told me, look, like the job of the casino is not to provide a game that is positive EV. Everyone knows it's negative EV. The job of the casino is to keep people at the table. And so if you think about that, how do traditional casinos do it? It's by having, free booze, in some cases women, they block out all of the sunlight so you have no idea what time it is. They have all these things that they've done to keep people at the table. Think about the digital version of this. This is, I think, why Pump.com launched a video streaming platform. It's the same mentality. It's keep people at the table. And I think the thing that's happened especially with things like the Libra coin launch and Lite and stuff, is that there's been this visceral thing in which people have lost, the casino's not fun. People feel like it's been weaponized against them. And in a really large scale way, and no one wants to play when you're so obviously being taken advantage of. So I think what the meme coin world needs to figure out is are there mechanisms to which the casino can still feel like a somewhat not totally weaponized thing. I actually don't know if there's an answer to this question or not, this is a solvable problem, but I think that's what it takes to sort of rebuild trust. People always want to gamble, so you just gotta make it feel like it's a fun thing and everyone wants to stay at the table.
Yeah, just adding on to the point that casinos are not fun, I think from our observation, there is a trend towards hyper-financialization, whether we like it or not. And that is especially true within the younger generation. We did a couple researches where we asked the kids, how much time you spend, trading and investing with your friends. And it's becoming a very, very social act, where previously we might have been playing mobile games with our friends and losing and winning together. Now they're trading meme coins in the chat group and winning and losing with each other. And that shared loss is not painful to them, right? There is the problem of social mobility for a lot of adults now, trading in this industry, but for the kids, they're having fun. And I think it's a lot of the projects and consumer products that are launching on top of the chain, you see a trend towards that focus of social and then also fun. Vector is probably one of my favorite apps this cycle. My dopamine is just getting spiked to the highest whenever I scroll through the feed. Not saying that's healthy like over the long run, but if you look at the evolution of casinos, early on it's just that little tick of that lever, you just pulling the lever. And now the pachinko machines, the slot machines have insane animation. So you realize like this is negative EV, but you still want to play. Your brain is getting stimulated, but it's fun. You don't do it all the time, but once you do it, you actually enjoy the process. And then one other thing is that I think there is going to be a revert to the mean, no matter what industry it is. So, for example, Arrington, you guys are looking at revenue-generating products for 10-year time horizons, and I think that's the same when we look at our charts in crypto to the internet charts in the 90 years straight. MicroStrategy chart is one of my favorites. 30 years to fill the loop, right? Like it's bottom for 30 years and just one giant wave up. But in the early days, the first period of that chart was abysmal, to say the least. So now I think we should separate the first really attention-seeking launch of the project with the later, revenue-generating process of like the second period. And oftentimes, as like us, it's better to invest in the bottom period leading to the second wave. But I think in crypto that happens a lot faster than in traditional internet because we're 24/7. It should happen at least 3 times as fast as the entire kind of internet maturation process did. At one point, we were measuring companies' worth with number of developers times 10,000 or number of mobile users times 100, and that was ridiculous comps. So I think we're actually moving towards that rather fast, which is why I'm more bullish on the DEXs, the GEOs, the chain, such and so forth.
I generally agree with all of that.
Solid. Well, I guess quickly to our final and last question then. I guess we're all here for one single reason, and that's just to hear what you guys want to show. So I guess as a final question, everyone just wants to know what's your favorite book right now? And I think.
Yeah, I'll give up. This is the first one for me. So I've been part of the Solana team for 4 years now, and so experienced a fair bit. And post FTX crash, it was like pretty dark days in the Solana world. I was like, oh, good, maybe I'm just out of a job. Like this whole mission that like thing I've been working for is gone. This was in December, January 2023. I don't know if I have my dates right. And the first sign of like hope and light that like okay, we were still alive was actually the Bonk launch. And so for me, actually, that's a very like special thing. And so yeah, Bonk is a unique one. I mean, I have zero view on the price. I don't even know what the price is today. I'm just telling you that they did something that was meaningful to me.
I would second that and add that I think Bonk is not traditionally what we call like meme coins because it's one of the most efficient teams I've seen crypto running 12 different companies, profit generating in each one of them, calculating the ROI on their advertising spend. It's an insane type of organization that I have not seen before. Solana itself is also quite interesting with the super teams. So those are my 2 biggest bags.
I think I said earlier my favorite meme coin is Bitcoin.
Cool. And of course, you can't forget DogeCon. So. Okay, cool. Well, thank you everyone for coming out. Can we get a really, really big round of applause for everyone?